Welcome to MarketTamer.com. It is Wednesday, July 15th, and we're looking at an options chain of Google, courtesy of OptionsExpress.com. Right now, we see Google is trading at 436.97. This is with a couple of hours still to go to the end of the trading day. And one of the questions we got during the week was on pinning. What does it mean to pin a strike? So I've used Google here as an example. And let's consider for the moment that we expected Google to end up at a particular strike price on expiration day, which as we can see is a couple of days away now. That would mean, let's say if we chose 440 as our strike, that means we expect Google to rise about $3.03 here to 440. And if that is our expectation, we can go in and take advantage of that by selling options. For example, I could sell this call option at 440 for $9.60. Now if I do that, I've got a naked call, and that's not something personally I enjoy having out there in the market, because there's essentially unlimited risk theoretically. And so we could purchase a long call option to protect against an upside move. And the net credit there would be the difference between 960 and 580 from the 440 and 450 call options respectively. However, that's not all I could do. I could go in also on the put side, and I could sell this 440 put option for $12.70 while purchasing the 430 long put option for $8.40, again generating a net credit. Now the net credit combined of those two positions is going to yield a pretty attractive premium. However, it's not going to be greater than the difference in strike prices overall. So for example, if I take in 960 and 580, 960 and spend 580 buying the long option, I end up with a premium of about $3.80. If I take in a premium on the put side of $12.70 and spend $8.40 of that, I end up with a premium of $4.30. So I combine those premiums together and I'm left with a premium less than $10. Now why do I mention that? Well, the reason is if the stock is more than $10 away, in fact even if it's more than the total combined premium away from the strike price, I end up at a loss in the trade. So if the stock ends up at 430 or 450, this trade ends up at a loss. If it ends up at 440, I end up with maximum profit, because the options, the short option, the short option on the call side, the short option on the put side will both expire worthless, as well as the long options expiring worthless. And even though I'll lose money on the long options, I'll end up making more on the short options. Now, the question then is, should we actually go ahead and consider this trade? Well, if you look at the pattern of Google on expiration day, you might determine that this is a pretty high probability bet. Many times you will see actually Google close close to its strike prices, close to a strike price. However, this month we've got earnings, and as we know, earnings tends to lead to considerable volatility with many stocks. Now Google tends not to be actually historically a very volatile stock. If you look at its beta relative to the market, it's not nearly as high as one might in fact expect. That being said, we could consider taking advantage of a strike pinning, but personally my preference is not to do so before earnings, just in case, because really I don't have any idea what's going to happen to Google after earnings. And this comes back to yesterday's discussion on known unknowns and unknown unknowns. I know that there will be an earnings announcement, I just don't know which way Google is going to go. So would I enter a trade before earnings? No. Would I consider one after earnings when the information has already been disseminated? Sure. And there are certainly techniques which we've employed in the past to take advantage of Google on expiration day, as well as many other stocks. But in short, always consider that a fundamental event such as earnings can derail a strategy such as this. It can derail a technical trend. There are many things it will derail. So always beware of earnings and fundamental events. And if you have any more questions, please don't hesitate to ask us at MarketTamer.com. All the best.